Welcome back, guys. Hope you're doing well. Just before we start, please make sure that you are subscribed and you like the video. And if you have any comments, just make sure that you comment. Interest the engagement. It does help out a lot. Um, yeah, so without further much to do, I think let's go straight into the question. So this is basically the last question of the November 2024 paper for paper one. And we're looking at corporate governance. So, things to have to do with the King Code as well as ethics and then also auditing. And it's typically the questions that you don't need to do a lot of calculations in, but you need to know what to say. So it's very important that you know your theory. But in general, these questions are kind of repetitive. So if you do enough past papers, you will come across these questions again when you do any of your exams, as your June exam, your September exam, or even the final exam. So let's jump straight into it. So here it says you're provided with an extract of the independent external audit report of Valiant Limited presented to the shareholders at the annual general meeting. And then you have the required, and then there's a big note there. In your answers, do not repeat your responses in the different questions. And it's key that they say this, and they say this because sometimes people can write in so many sentences, but they don't realize that they're actually writing the same thing. So just make sure that whenever you write, you try to keep your sentences as short as possible, but very concise and succinct to just make sure that when the marker reads, the marker is just able to give away those marks easily. All right, so let's get straight into it. So we do have an answer sheet here that we're going to be using, but we don't need it much. It's just just really a few things that you're going to need it for. Barely anything actually, really. But I will just be using it more so maybe for the structure of it rather than what is in there. But you could answer without it. So the first question says that explain the role of an independent external auditor and provide 1 point. So this is a simple question, and I'm going to write it down, and then I'm going to explain the independent auditor. So the role is to express an unbiased opinion on the fair representation of financial statements in order to protect shareholders and the public. Now, remember, guys, that um, when you're a public company, it means that you can be able to sell your shares to the public. So that means that you're opening that risk of people investing money into the company and they could potentially lose that money. So there becomes then a greater responsibility in ensuring that whatever information that you're putting out there as a company is true. And so that would be the role of an auditor then to come and basically look at the financial statements that have already been prepared and basically come and say, well, this is correct, this did happen, this did not happen. And then, you can basically kind of take it from there as a person that's looking for a company to invest in. But if a company has an audit that says it's bad, you probably don't want to invest in that company anyway because you cannot be able to rely on those financial statements. All right. So that's a simple explanation there that the role of an independent external auditor is to express an unbiased opinion on the fair representation of financial statements in order to protect the shareholders as well as the public. All right, next is there's a question here. It says choose the correct word from those that are in brackets, and it's already kind of uh, asked here. It says write the answer and explain your choice. It says Valiant Limited received A or N, so you have a qualified audit report, an unqualified audit report, and then a disclaimer of opinion audit report. Now, let's just give it definitions to each of these because these are the three types of audit opinions that you need to make sure that you understand, and you can be able to differentiate once you read an audit report which one it is. A qualified audit report basically is a report that says that in all material aspects of these financial statements, they represent the they represent what is basically true. They are fairly represented, except for something particular. So they would say that except for the presentation of vehicles, except for the presentation of interest in the income statement, except for the presentation of sales, whatever the case may be. So in general, they're good, but there's some exceptions. And so when an auditor basically says it's a good audit, but there's an exception, when they say there's an exception, that would be when they are qualifying their audit report, to say they are qualifying it when they include those exceptions. An unqualified audit report is basically an audit report that basically says that in all material aspects, the financial statements represent the true financial performance, statement of financial position, as well as the cash flows of the said company. And then lastly, the disclaimer of opinion. With the disclaimer of opinion, it is when the financial statements are misrepresented so much that the auditor chooses to withhold their opinion on the financial statements. This one is extremely bad, and it can affect the reputation of the company. So directors will try by all means to avoid a situation where they have a disclaimer of opinion audit report. All right, cool. So moving on, then we then need to basically read this audit report so that we can decide if it is qualified, unqualified, or a disclaimer. So let's see. It says, in our opinion, the financial statement present fairly in all material aspects the financial position of the company as at 29 February 2024, and then the basis for the audit opinion and the audit evidence obtained is sufficient and appropriate to provide a basis for our opinion. All right, so in this case, you can see that they said in all financial statements, they didn't make no exceptions. In other words, they did not qualify their audit. And so the audit opinion that we have here is an unqualified audit report. And then write the answer and explain your choice. All right, so we're going to say it's an unqualified audit report, and then we're going to state the reason why. Because in all material aspects, the financial statements are a true representation as at 29 February, I think that is 2024. All right, yes. Yes, 29 February 2024. So that's pretty much it. fairly straightforward. All right, then we move into the next question. This question says, what kind of audit evidence does the independent external auditor examine to verify fixed assets in a company? So there's a lot of evidence that can come into this. And we basically then we need to state what are those, and we basically need to basically make just 2 points. So let's get into those 2 points. So firstly, we need to they would verify the physical existence. So that they specify, which I said, they said fixed assets. So they said fixed assets, okay. So verify the physical existence of the fixed assets and compare that to the asset register. That's one of the things that they can do. Secondly, they can look at the depreciation calculations. So verify that the correct rate was used for depreciation, as well as the correct method. So they can verify that information by basically performing that calculation again and then confirming if that number does comply, and it's still within there. There are many points, there are many things that they can be look at in these cases. I think one of the things that they can do is that they can check registration certificates, and this is would be through vehicles, for example, check registration certificates of its vehicles, or check the title deeds, because just because someone shows you the physical assets and stuff like that doesn't necessarily mean that they actually do own it. So you actually need to go into the ownership documents to kind of see if it is indeed the case. And then I think the other thing would be to check invoices to verify the cost of the fixed assets. So you go to the invoices and basically check, well, the business, they claim that the cost of their assets is 200,000. What does the invoice say? Does the invoice correspond to that cost? So that's some of the things that we can do. We only needed 2 points, so you can just pretty much take these first one, and I think they are the strongest points in all of these anyways. And then let's move to the next question. The next question, let me read it from this side actually. So it says, what are the implications of this audit report? So, what are the implications for directors? So, I mean, this is good for directors and shareholders. So, for directors, it means that they are likely to be reappointed, because when you get an unqualified audit report, it means that it says something about your integrity, something about your truthfulness and not trying to manipulate financial statements. So likely to be reappointed to their directorship position. So it's likely that the shareholders reappoint them. And then the other thing it does, it improves their reputation for future opportunities in other companies, right? And then there's the implications for shareholders. Well, the shareholders will be certain that their investment is protected, that their investment is protected, and then it will also improve reputation the reputation of the company, and thus will have positive impact. It will have a positive impact on the share price, because shareholders care about the share price of a company. All right, so that's that. And then it says state 1 point in each case. Well, I guess I stated a bit more than 1 point, but yeah. State 3 possible consequences for independent external auditor if he was influenced by the directors to deliberately provide shareholders with incorrect audit report. Well, there's criminal elements to this. It's not just unethical, but there would be criminal elements to this. And one of the points maybe that we could say is that they could be imprisoned. They could be, because as an auditor, in order to be an auditor, you need to be registered to a professional body. So they could be deregistered from their professional body. And that means they won't be able to then audit again. And then the other thing that could happen is that they can be sued by directors and public who So directors will sue them for financial loss, and public would sue them who invested following their opinion. So there's those potential that one could be sued for those reasons. And yeah, so imprisonment, deregistered from the professional body, and possibly getting sued. And yeah, I think those would be the three possibilities or consequences for giving a false audit report. And that pretty much ends our session here. And I shall see you guys in the next one. So please make sure that you like, subscribe, and comment. And then also make sure to share with your friends. And then remember that the answers are going to be in the description, as well as the link to the playlist, so that you can be able to see the three questions I did before this, which is, the other question was on financial ratio interpretation, the other one was on the cash flows, and then the other one was on company financial statements. All right. So yeah, that brings us to the end of our session, and then we'll see you in the next video. So cheers for now.